What's up, YouTube? So in this video, I'll be covering the dynamic price ranges I was going over. And also, there's going to be a mini quiz in here. So if you're learning what I'm teaching, we'll know based in the comments. But there's going to be a mini quiz based on the stuff I'm teaching right now. Also, I'm sure there's going to be live examples in here and that sorts of thing. So you'll be able to get a chance to train yourself to kind of see what's going on. But with that being said, assuming everyone understands a lot of the core components of my model, we're going to be focusing a lot on the 930 open and what happens after that. So when I come to my chart, this is literally what I see. Aside from candlesticks, this is what I see, and this is called the dynamic price ranges. And this is not tailored to candlesticks. It's more about understanding when you're in premium, when you're in discount, and it's what sets in high probability trades. So essentially, whenever I arrive at the open, I like to toggle off my candles and see kind of exactly where we're at and put the candles to the side. And basically, when you're beneath the midnight 8:30, you really only want to be focusing for longs. And using the window from 7 a.m. to 9:30, you usually get liquidity pools in there that tell you what side it wants to cut through, right? So when you arrive at your chart and you start to see these things form, it's essentially tipping its hand telling you that it wants to go higher. So looking at the aftermath, as you can see, price has like a little 3 drives pattern to the downside. And then once it shifts, that's when it starts running higher for your draws up here after 9:30 manipulates to the downside. Another thing I want to point out is a lot of people are just trading any type of price swing, like they would call this a breaker, and they're not actually keying off anything on the higher time frames. So when it comes to looking for your entry model, you only want to be keying off certain levels. So when I take this stuff off my chart and I refer back to this, I only like to look for setups that occur once it hits my levels. I don't like to look for outside of that, and that's when your high probability trades are going to come from midnight to 8:30, and then trade off these key levels down here. That's essentially a deep discount. So looking at the most high probability trades and when they interact, you can see down here, we took sell side. We never took sell side before that. We took sell side and then immediately have a change in state. We tap the order block and then we run higher. As you can see, once we hit this buy side liquidity, that's when we start to shift and go lower for a nice price swing from this breaker down to sell side. Also, I got you guys covered. So with these two fair value gaps here, essentially this is what I was looking at for my long. I said 2 fair value gaps, always take the first one. A little keyboard mash there. I don't know what happened. But the first fair value gap, we bought and then we sold at this buy side up here, anchoring a fib from the low to where you think price is going to go. And this is called grading a price swing. So essentially, you just take a fib from wherever you think the low is to wherever you think the draw may be. And then at the 50%, that's where you're going to get your measuring gap and the fair value gap you should be looking for if you miss down here. And the way to look at grading a price swing, right? When you're down here, you may not get in beneath here. You might not get that. But once you start to get that feeling like, okay, we're reversing here, you can anchor your fib up to that high and then start looking for the PD array that forms. Looking at this example here, as you can see, we have 7 a.m. lows. We're above 8:30 and we're above midnight. So there's no way you want to long. We do have buy side up here, but that doesn't mean you long that. You're literally in a premium. There's no way you should be longing that. The expectation on something like this, you would want to target these lows and then maybe something beneath that. As you guys can see, the 7 a.m. lows are down here, right here, and right here. So that's the draw. So when we're over here at our open, yes, we see buy side, but we're not interested in that. We want the sell side. So taking that fair value gap and putting a limit on that would be your best scenario for a short. You're above 8:30, you're above midnight. Opening range gap is in a premium, so an opening range gap higher. you only want to be focusing on shorts. Also, we're reacting off a 15-minute SIBI with a short-term high, intermediate term high, and a short-term high here. So this is a protected high. So anchoring your fib from the high to where you think price may go, around the 50% should give you your measuring gap and a high probability fair value gap that should take you there. From here and above, you might not be able to position yourself in there because it takes a little bit of experience. So you might not get in over here. But that's okay, because once you understand grading your price swing, you know there's another entry around the 50. And I got you guys covered. So this is the sell side here. This was a trade I took in the Discord. Here was the fill. And don't pay too much attention to this right here. In terms of the 2026 mentorship, if you guys want to follow just videos like this, where I'm covering strictly the dynamic price ranges, using daily bias and opening range gaps, that's what this 2026 is going to be about, really. And mind you, there's a lot of playlists in here. Like, there's over 100 plus videos. All right, so this is going to be a comment quiz. So based off everything we just covered, you're going to comment if you think price is going bullish or if you think it's going bearish. So if you think price is going bullish, I want you to put bullish and the reason why. If you think price is going bearish, I want you to say bearish and the reason why. So looking at this, let's say you arrive to your chart, right? And you're way beneath midnight. You have some 7 a.m. highs here and you're beneath the 8:30. What is that to you guys? So what do you think price is likely to do here? As you can see, price hits a fair value gap and then runs higher, straight to that buy side liquidity in the form of 7 a.m. highs. Also, there's an opening range gap lower, so it's a discount. So we're opening up in a discount. We're under 8:30, we're in a discount, and there's an opening range gap above us. So I'm going to let you guys in on a personal study / find that I trade a lot, and it has to do with fair value gaps and understanding when you're going to get an inversion way before an inversion even happens through bias. For all the years I've been trading this model, right? And it hasn't been to the public. It's just been like a personal mentorship, Patreon type thing. What I will say about fair value gaps is when you're on the 15 and 5 minute, right? And you're in a deep discount. So what that means is, as you can see here, midnight open is there. 8:30 is like here. And we're already under that. You notice how Asia's putting in like a nice liquidity pool. And then, you know, around 7 a.m., we have some highs here that are just very equal. Whenever you have that fair value gap that's in a deep discount on the 15 and 5, you can literally see that as an inversion. You don't need to worry about it getting down to the new week opening gap. The reason why is because you're already in a deep discount. You don't even want to short that. Like, even if it presents itself, you don't want that. You don't want that. So let price do whatever it wants to do in terms of going lower. You need to start looking at this fair value gap and see price be able to cut through that, going higher around the open. And being able to see your model form through higher time frame PD arrays. And you can really anticipate an inversion just by looking for those fair value gaps all the way in a premium or all the way in a discount. So if I'm bullish and I want to go higher, I'm going to treat this as an inversion, which means any type of PD arrays down here that's forming bullishly, and I can see it closing in this, I can just get on that, whether it's an order block, a fair value gap, an immediate rebalance, anything, because I know I'm in a deep discount. So this is the good stuff right here. This is the good stuff. I'm not sure if you guys like market reviews or not, or maybe the community's messed it up for you guys, but this is not going to be your typical market review. This was my daily bias. I was saying it's a day after a bank holiday. I'm 50-50. I'm going to lean on my intraday targets. So you can see on the daily, this is what it looked like exactly at the open. We still have this fair value gap up here. We still have a key level down here, and it's not up for you to be like, oh, it's coming down here, or Yeah, it's for sure going up there. Once price gets there, that's when you start focusing on that 1 minute. You don't really need to focus on it too much before that. You really want to focus on it when it's in key levels. So the question that should be going through your head whenever you see your daily candle is, where are those pools in here on the 15 and 5? Because that's going to tell you everything. This was the aftermath. So before, after. Also, we had opening range gap higher. So this is likely to be filled. Even if you think price is bullish, looking at them side by side, as you can see, this is before we got into this fair value gap. And this is the opening range gap before we got into the fair value gap. So in terms of what side are you favoring? Like, where do you want to trade? You have rules. I mean, are you in a premium? Like, where's the opening price? Where's 830? We're not there yet. And this is the aftermath. So this is what it looks like on the 5-minute time frame here. And I don't have the opens marked out or the 830, but midnight is down here and we're slightly under 830. So right now we're just in a discount. We're not in a deep discount. 830 is like somewhere over here, but we're just in a discount. We have some nice sell side down here. We have some nice buy side up here. So what side are you favoring? That's the question you should be asking yourself. This is the aftermath. So we open, we run higher into that fair value gap, wiping out the buy side on the 5-minute. And then we just trade lower, wiping out the sell side. Also, notice the run took place above 830. So by the time you were already up here, right after the open, you're literally above midnight. You're literally above 830. You don't even want to be buying that. So looking at price engage with that daily SIBI, at this point, price literally just ran. There's nothing you can do. But what you can tell yourself is, you know what, we're above 830, we're above midnight, we have some nice pools under us, and we're hitting a key level. Let's see what price wants to do. But as you can see here on this candle, right, we failed to hit CE. That's one thing you need to notice. And the next thing you need to notice is now you're hitting a key level. We trade down, putting in this order block here. And why is that an order block? It's an order block because it's hitting a key level above 830 and midnight, and we have some nice sell side under us. That's what makes this an order block. It's the relationship between the price level and this time. So to simplify that, and what that actually means is, if you were to get rid of this candle and all these candles and just focus strictly on the opening price, so basically you're here. Basically 830 is above you and midnight's beneath you. And you have a key level up here. So what does that mean? It's like in the beginning of this video. You only want to look for your trades at key levels. So if it's not a key level, you don't really want to look for your trade. So we hit the key level and we're trading down into what looks like a breaker. But the reason why I have this annotated red in this live candles, this is not bar replay, but the reason why it's red is because I'm expecting this to fail. Why am I expecting this breaker to fail? This is the next part of the quiz. It wasn't supposed to be, but it should be now. I really want to see if you guys are learning, but why would you expect this breaker to fail? And there's only one right answer. I literally said it in this video somewhere, but why would you expect this to fail? The only reason why you would expect this to fail is because you're above 830 and you're above midnight. So you want to see these things fail. It's an inversion. Because if this shows support, it's just a low probability long because you're above 830 and midnight. Some key things to notice too is you're above previous day high. So that's a premium. You're hitting a higher time frame key level. So that's a premium. Now, this is what I said to the Discord. I said, if price wants lower than around the 50, should give a good FVG. I'm grading the price swing from here all the way down to where I think it's going to go. and you can see it's live candles. There's 57 seconds left to this, and this is where we went short.
Now right away you can see it's using it here and here. And where do you think it's drawing to? Before this even formed, before 9:30 even happened, while it's dropping down, in your mind, you're going to cast forth a vision. This is what I do. I'm looking at the market and I'm casting forth a vision. I'm waiting for a price run that creates a long, protracted down close candle. I'm waiting for that to form. I'm anticipating that to form. Because I know all of this reaction from this run here is likely to see us go all the way back down to take overnight lows. That's the draw. Now, the easiest way for you to have this on your chart or a routine is overnight lows. Just simply mark off midnight Eastern time to 7 o'clock in the morning. Whatever the lowest low there is, if it's relative equal lows, that's a loaded deal. That's where liquidity is. It's going to want to seek that if it's bearish. Not all the time, not that very day, but that's how I classify it. I'm looking for that lowest low overnight. In this case, we can see it being here. So that's a relative equal low. So you can see that that's obviously.
And mind you guys, I've been doing this for years, bro. Like,